Okay, so this is futures. It's the DAX futures. We can see here now. I've used this as an example on the 60-minute time frame because a lot of the time we are using the 60-minute time frame when we're day trading, for example, to see the overall picture, the behavior of a particular instrument. In this case, at the end of September, we formed a really perfect back pattern that actually came down into the projected. Look where that at bottom finds. It's actually at the New York Gold Pit Open, okay? And then we got the New York Stock Exchange Open, and then we start to move up. Where's the long going to be? I'm going to use my 34 EMA for that long. I'm just going to make sure that's gone. I'm trading 60 minutes. I can trade this. I can swing this, okay? It's a 60-minute time frame. Or if I want to go down to 3 and 5 minute and I get a signal on there using one of the other indicator suites, I'm pretty confident that long's going to happen. So in this case, it's really, really simple. You've got a long-term swing on DAX futures. As soon as it breaks up above there, it goes, and you see how the cloud holds that all the way up there. Really, really cool. I think I've got an ES example here as well. When we look at ES on the 15-minute, another example of that pit open, okay? So this happens a lot, but I want to go through 2 examples here. So here we have the New York pit open. It's a bit wavy, you know, comes down to test the cloud. You go long, you know, we're not really getting the wicks. You can go long when it breaks out of there, comes down because the cloud's held. Now look at this big red candle. If you're already long and you get out on a trailing stop here, you're going to go short. Now drawing tools I can use on here. So let's draw a line. You've broken out of the New York opening range. You're down through the cloud, big bang, go through this recent low since the open. That's the short, okay? But just having these opening ranges on your chart really gives you an idea. You know, I'm all about framing charts, putting support and resistance zones in there. These opening ranges are support and resistance zones, guys. So when they break, okay? And this is a prime example of what happens there. So let's clear all those drawings. So again, we go through the London Open. I haven't marked them on this one. I just want the New York one. ES forms that first 15 minutes. Okay, it doesn't really go. You can go long. Doesn't take the stop out there. It comes back down and rejects on that cloud. Okay, so entry would be above there. Go long, and then it just keeps going. Okay, really, really simple strategy. But again, it's to use in combination with everything else that you've got. So this is oil. Okay, now this has got a lot on. This has got the roller coaster on because I wanted to highlight some really cool ideas with this harmonic pattern generator and these opening ranges, okay, and obviously the cloud as well. So here, 60-minute time frame, we've got a bat pattern this time, okay? It's recognized that bat pattern, and in this area here, so this area here is the projected completion zone. It just stays inside. That's pretty cool. Okay, so it completes. Oh, it completes at the top end of the European opening range. Freaky that, isn't it? Okay, so we are looking for a short. Then we've got the London Stock Exchange Open. We're still above that cloud. We start to come down below the cloud. We're looking for the short. Hey presto, oh, we get a roller coaster short signal. Okay, so all of a sudden now, we on a 60-minute time frame over 3 days, we've generated to the tick, really in the zone, a perfect harmonic back pattern to look for a short. We've done that at those opening ranges. So we've gone long overnight into those European opening ranges and we're looking for a short. Now it's not just Europe, it happens at other times as well. But then we get the short. We don't want to go short too straight away. We want to get the open done for the FTSE stock, you know, for the stock exchange. Then we get down below this cloud. We generate that signal for the roller coaster. We're going to go that 39.60. The trading stop was taken out at 37.45. Okay, what's that? 200 ticks. Really, really cool. And that's basically, you know, one of the things that we're looking at here is complementing strategies that you already use with this add-on club. Now, the harmonic pattern on its own is probably worth about $800. But what I want to do is go away. I've got 3 indicators on Trade the Fifth. I've got 1 new algo that is going to be really hot stuff. That's going to be separate. But everything else I do, whether it's also, you know, candlestick pattern, you know, automated recognition tools, all those little cool tools that help you alongside your strategies, those will all go in the add-on club. And there's some really cool stuff coming up the rest of the year and beyond. I've got so many ideas, it's unbelievable. But it's all stuff that I would use and I find helpful. Okay, so this is for stocks. It's Amazon on the 5 minute. Okay, look what is forming right now on the 5 minutes. It's a potential bat pattern, but we need it to complete into this zone. Okay, it doesn't have to be Amazon, it could be any other stock, but this is cool right now. If we get a short signal right now for Amazon, this Amazon zone, the automated zone to complete the bat pattern, hasn't been completed, so it wouldn't be a really high probability risk. Plus also, we've had a long signal on the roller coaster. So again, it works on stocks and on any time frame as well. So one of the things when we're looking at stocks on the daily time frame is I use two clouds. Okay, I use the 55 EMA and the 89. As long as the 55 is above the 89, we're in a really good bullish state. So when we get a wave 4 pullback and we don't even test there, okay, and we're looking for a fifth wave, there you go, Amazon, boom, okay, really gives you that confidence with those EMA clouds. Now, I can't stress this enough. I am developing these things to help you with our current indicators. Look when this Amazon pulls down below, test this support zone. You can tell I tried this before, okay? Look at the 55 and the 89, they come together, okay? We get a long signal on the roller coaster. Now, you don't go long into the resistance, but you're going to go long above. Are you going to be more confident now that the 55 is moving away from the 89 with that roller coaster move? Of course you are, okay? What I wanted to show you was ES on the 15 minute with all of the opening ranges on, okay? So let me go to 15 minutes. So again, with the opening range strategy, what we do is color the candle of the opening range yellow, okay, to denote that as well. And we put those ranges on when it decides to catch up, that is. There we go, okay. What I wanted to show you here was examples where ranges can be tested. Okay, so here's a harmonic pattern on ES on the 15 minute, okay? It's a bat pattern this time. Yeah, we've had the London opening range. We've had Europe gold pit open here. Look how on this bat pattern here, it comes up, we have the London opening range. The apex of the bat pattern finds resistance at the previous opening range, okay? Now this is pretty, you know, it happens a lot. We then come back down to test the lower bound of the European gold pit open. Freaky stuff, but it happens a lot of time, okay? We then meander on up. We have the New York Stock Exchange open and it goes to complete the bat pattern. So at that point, we move down. So are we really going to trade that before it gets below the 34 EMA cloud? No, we're not. Why? Because it's going to pull back down into that opening range of the New York Stock Exchange. So, you know, this day, you know, the trades were earlier on in the day, but with this completing, we've got this really big whipsaw thing and the 34 EMA holding there and this New York Stock Exchange opening range and, you know, the gold pit open range and all that sort of stuff. That's good support. It's going to go. Now, then when we get to the next day, we've got the European gold pit open, the London open, same highs, okay? Good support, riding along the 34 EMA, not really a trade there. But when we get the New York Stock Exchange open, the 15-minute candle, that yellow candle there, we're moving away from that EMA cloud. This is pretty good, okay? We look for the long, there it goes. We can use the bottom edge of our 34 EMA for a trailing stop. It comes back to test it, goes back up again, close it out for the end of the session, or even carry it. Look how far it takes to the European Open the next time. Before then, we go slightly short, okay? It breaks that range, we go short because it's below the 34 EMA. We then start to come up towards the New York Stock Exchange Open. Are we going to go long in here before the Open and while we're in all of this London and Europe Open? No, we're not. We're going to wait for the New York Stock Exchange Open. This goes sideways. We're not really breaking out. We've got no candle closing above this opening range. We come back down to test. Then we get a candle closing above that range. Go long. You've got to trade and stop at least risk-free now, and that's that big short we talked about earlier. Really, really big short there going through that particular entry. So